Most traders mess this up by going too big, too fast, but this video I'm gonna show you the opposite. As you see here, this is our $2 scalping blueprint that I'm gonna give you to break down step by step on what pairs you should trade, my map strategy, then the risk that you should have while growing this account. So if you are not already subscribed, make sure you subscribe, like, and comment. Now let's get to it. So the $2 lot scalping blueprint. This is going to be a complete game changer, and I'm explaining why. Now I want to start off with the 3 pairs that you should be focusing on when it comes to trading. So the first pair is going to be oil. It is high volatility and is strong during New York session. Right now, this is currently New York session. And as you see at this given moment, just from top to bottom, price had already did about 100 points, given the fact that we just opened a New York session. The beauty of oil is it moves a lot slower than NASDAQ, but the nice thing about oil also is that it is consistent. So if you like trading something like NASDAQ or US 30, expect less manipulation and way more smoother structure. Now, the next one we're going to be paying attention to is NASDAQ. If you are into something with high volume, this is going to be the scalper killer right here and the favorite for you guys. And as you see with NASDAQ, this is another opportunity during New York opening that you can catch, and I'm going to explain these setups in a bit. And then the last one is going to be GBP yen, faster mover with tight structure. So if you don't like to trade any commodities, or if you don't like indices, you can trade this Forex pair. And I'm also explaining how to trade these 3, which is one simple strategy that is called the map strategy. And then I'm going to show you the risks that you need to follow. Now, before we get into my strategy, I want to let you guys know that the broker we will be using for this is going to be GatesFX. The beauty of GatesFX is they offer up to 1 to 1,000 leverage. Now, let's say you want to deposit anything from $250 going all the way up to even $10,000. They have something called a sign-on bonus that you are able to get 100%. So if you are trading with a $500 account, they will up that with 100%. So now your account will be sitting at $1,000. So if you want that, go ahead and get the link down below. Go ahead and deposit your funds. And then let's go ahead and talk about the map strategy. All right, so let's get into the first one. This is going to be market liquidity context. So this is where the money is sitting. It's your job to understand the daily bias by identifying the internal liquidity targets. And then we're going to have a checklist that you have to follow. This is the first thing you need to do before you even consider entering in a market. 1, you have to plot previous days highs and the previous days lows. And then you want to 2, identify what is the Asian session range. The reason why we always look at the Asian session is typically for commodities and also indices. It just does what we call consolidation. And this is kind of a cheat code for you to know what will happen during London opening or even during New York session. And this can be a big game changer for you as a scalper to identify that, to get in a lot of these traders sooner. So now we got to also ask ourselves, are we currently inside the range, which is what we call accumulation? Another thing we also have to identify is sweeping above yesterday's highs. So if we see that yesterday it already surpassed the high, let's just say this was the daily high and we already broke past that, then that could basically mean distribution. So are we distributing out the prices? And if that's the case, then we now know that the market could be going down for that following time. And then also sweeping below yesterday lows, reaccumulation. So either is the market breaking past these lows, and if it is, this could actually mean the market could be going the other direction just because it's reaccumulation. Now the next thing, after we establish that, you want to head over and look for the area of manipulation, where the traps happen. You don't want to get faked out. You don't want to get stopped in something crazy. You want to know exactly when and where you should execute your trade. This is your liquidity engineering zone, where price fakes one direction to set up the real moves. The checklist for this is you want to look for internal highs and lows formed during London or pre-New York. And then you want to look for wick sweeps that grabs liquidity and reverse. So what I mean by that is, if you see a resting wick at the top and a resting wick at the bottom, and the market comes up here, expect that price will come back down here, because this is what we like to call our liquidity phase. Remember, you have resting thousands of millions of hundreds of dollars here as well as here. Why will the bank not want to come to that next zone area and grab and sweep that liquidity out too? So keep that in mind. And then when we see that, this is areas for us to enter, and this is what I like to call liquidity phase. So then after that, you want to see a displacement candle that breaks structure afterwards, which a displacement displacement candle is anything known as an engulfing candle that is twice the size bigger than the previous candle. Idea manipulation areas is going to be above the internal high into the previous day's high, or below internal lows into the previous day's lows. It's kind of what I just explained earlier. Now, once you understand that, now we head into the P, which is precision entry. Where exactly do you enter? Once price confirms manipulation, you drop to the 1 minute chart and execute that sniper play. The checklist that we need to follow is going to be quite simple. The entry model is we want price to sweep liquidity zones first, and then we want to see a pullback off our fibs. We're going to be looking at 3 levels, 44%, which is, I did not put in here, and then we're going to be looking at the 50% and the 618. And then we have break of structure on a 1 minute confirms reversal. And then the final is enter on retest with a tight stop. The stop that you actually could do is anything from 8 to 12 pips above or below the sweep. Another great way to execute this and get a tighter stop loss is if you enter on a displacement candle, and then let's just say this is the displacement candle, entry is here, your stop loss can literally be 8 to 12 pips from there as well, and that could be your trade. So let's say that the price already sweeps the daily high New York session. I'm automatically looking for sales because, like I said before, we have resting liquidity here that the institutionals want to grab first. If we already sweep daily highs, we have to keep in mind that we also have something called internal high and internal lows. So inside of this daily candle, we have smaller liquidity that needs to be respected. As a scalper, this is something we need to be cautious and aware of. So let's say that we identify that we had an internal high and an internal low, and this is where price is currently. Well, first we have to see which direction is it going to take first, meaning are we going to take the lows out? Let's say we decide to take the lows out. Also on a higher scale, we took the highs out. So now my mindset is what direction could we be going? So essentially what will actually happen is price will do what we call the liquidity phase and grab and sweep out all of this liquidity here. And then before we drop down here, we will see it actually start going right back up. And then price will immediately take out these highs to then drop down to take out these lows here. The cool thing about this is if you know how price action works, you will see patterns happening inside of this internal low, meaning you won't get enough selling pressure. You will actually start to see buying moves. And sometimes what happens is when we look at the actual market, for instance, let's say that this is a prime example of one. We have oil here. So this is our internal high, and let's just call this our internal low. And then also going into a higher scale, we go into a 1 hour scale. We look at this previous daily high, and then we also have this daily low here. Now let's ask ourselves, all right, we still haven't took out either the high or we still haven't took out the low. So what are we going to do? Well, another cool thing that we pay attention to is either internal or external. Right now, external never happened yet, but internal did. So we see that we already swept all of these highs, but now we also see that we have lows here. So could this mean that if we take on this trade, should we see this happen first? Yes. So ideally, if we go into the 5 minute time frame, this is where we should start seeing the buyers are weak by creating major wicks or multiple wicks, and then we can start to see more sellers in the market, and that's where we look for the selling opportunity to grab this liquidity here. And then potentially, depending on the direction that market wants to go for external structure, we can either take out the lows first, or it can just say, you know what, let's go ahead and take out these highs next. This is currently platinum that I'm showing you guys. This works on any time frame because this is true price action, true liquidity, true structure. So now that you understand the entire game plan, let's talk about risk management, which a lot of you guys might not even think this is so important, but this is the reason why 90% of traders fail. They over leverage, they over risk, and they skip all of this part just to think the strategy is what's going to make them profitable. So if you're still watching this, I appreciate you, and comment down below risk management. That just goes to show that you guys truly care for these videos. Now let's go ahead and talk about the logic behind the trade size. So the whole psychology is $2 a lot equals $20 per 10 pips. Essentially, with a $500 starting capital, let's say obviously you go with GatesFX, this gives you a lot more leeway to trade it with. They use Tradelocker, and the reason why I'm considering GatesFX is because they have a risk calculator where you can say I only want to risk 4%. So as you see right here, we only risking 4%. You can do that with GatesFX. So if you have a $500 account, instead of you trying to figure out what is 4%, you go into Tradelocker and you just put in 4% is what you're looking to risk, and it's going to automatically do everything for you. After that, you have max. So you want to focus on 1 to 2 trades per day which equals a total of 8% total risk. Only increase lot size after 3 consecutive wins. Only increase lot size after 3 consecutive wins. Please write that down. Put that in your notes. That's important. Now, bad day, this is going to happen. If you lose 2 trades in a row, you stop for the day. Remember, guys, if you lose 2 trades in a row, you stop for the day. And then if you win 1 trade and lose 1, you stop 2. Consistency over thrill. So you want to make sure that you're always staying consistent with this rule, because this is what's going to scale your account literally from that $500 to $10,000. This whole game plan here, as this is the exact game plan I follow just trading 1 pair. Let's talk about the flip flow, because this is also important too. With the flip flow, let's say day 1 and day 2, your account size is at 500, lot size $2, and then your risk is 20, and then you're looking at $40 and $80 for your target. Perfect. Now let's say within 3 to 5 days, your account size now goes from 700 to 900. Now you can increase the lot size to 3 or 4, risk anywhere from 30 to 40 bucks. And then your target is going to be 60 to 120. And then now let's say you go to 6 to 10 trades, your account should be about 2,000, and then 5, and then 10, and then your risk 50 to 100, and the target 100. Now I'm going to say this again. A lot of you guys might not understand this, but the way to scale a $500 account, it is not the strategy. It is this right here. If you follow this simple rule and you understand that your risk management is going to be the reason why your account grows, then you will be a profitable trader. But once again, a lot of traders don't understand this. And this is why I always say 1 out of 10 traders will always fail, because they still don't understand how important journaling, how important putting down all of your rules is. And as of today, this is why I still follow my trading plan and have this shit in here. This is what I teach students what to do and how to follow it. If you are a trader and you need more help, all you will need to do is go to tradewithsolo.com. We have 2 options. Option 1 is you can actually join for free. All you need to do is go ahead and sign up with the broker we use, deposit anything from $250 and more, and you'll be added to our entire community, where you get to see all of the exclusive videos, see live streams when we go live, and also our signals when we post that. Additional to that, if that's something you don't want to do, you can go with option 2, which is just a 7-day free trial, and then it's just a monthly subscription. But once again, in our community, tradewithsolo.com, we teach everything in depth. So if you want that, you can get that. Other than that, I appreciate you guys for checking out these videos. I'll see you, your boy Solo. Peace.